What's up everyone, Taiki here, and in this video I want to give an update to my MKR Thesis. If you like the content, please like and subscribe and check out the premium Discord. I post 3 videos every single week and I share my portfolio in real time. So what you're seeing right now on your screen is this one of my wallets. So if you've been following my channel, you know that for the past 2.5 to 3 months or so, I've been just full port lever long maker. And of course, if you look at the chart, it's been working out fairly well, right? My cost basis I think is 1343, like it's like 1.5x long, or I went 1.5x long maker at an average price of 1343 essentially. So you know what that means is on chain I would take maker as collateral, borrow stablecoins, buy back more maker, and then re-collateralize. And of course this does present risks, right, of liquidation and like what do you do if the market dumps. I mean, all that is true, right? You know, I mean, I think in markets you have to trade with conviction, and when you're right, you have to bet big, and that's how you really make money, right? If you don't bet big, then you make no money, unless you get really lucky. It's just like my style. This isn't my only position. I have like more maker on other wallets, so if the market price goes down, then I can re-collateralize, etc. But that's kind of how I've been positioned for the past 2.5 months. I've also bought back some Fartcoin. And before I talk about like the agenda, right, of maker, I've been giving this more thought, and I've come up with a very, very sophisticated portfolio construction strategy that hopefully you guys can learn from. But you know, you guys know this bell curve chart, right? It's like, okay, like left curve and right curve, they make a bunch of money, and then mid curves like me tend to not make that much money. I think anyone claiming to be a right curve is probably a mid curve. So I think I can kind of simplify this strategy to this, right? The left curve and mid curve barbell. Left curve maybe like meaning, okay, like crypto is just a giant casino, just like buy things like Fartcoin, right? Hot air rises. And then the mid curve part of me is like, okay, well, actually, I think there's edge in buying cheap tokens at good prices, and then like letting the market converge to my thesis. And that's kind of what I've been doing, right? It's like left curve is like the green dildo, right? Fartcoin go up, hot air rises, and then like, you know, the mid curve side of the barbell is, you know what, like maker is good, right? I just like buy low and hopefully sell higher. So that's kind of the sophisticated strategy. Hopefully you guys can learn from it. Not financial advice, but let's actually talk about these, right? So the buyback program, the sky staking, Spark TG, and the stablecoin bill, which is kind of part of the thesis. So right now, the buyback program, every 30 minutes, the protocol buys back $10,000 of their own token, and that's going to be roughly $500,000 per day. So if you adjust for the market cap or the buyback to market cap ratio, this is actually like the largest in crypto. And I think that's kind of why Maker was so resilient when the markets were dumping. So this is a charter Maker, right? I'm not a huge TA guy, but I mean, it looks pretty good. But if you take the Maker chart, right? So this is the Maker chart, and then you overlay the price of Ethereum. Of course, Ethereum has like pumped a lot recently, which is obviously good for things like Maker. But you notice like, you know, after like the whole tariff stuff, right? Maker was holding up fairly well, whereas Ethereum was collapsing, you know? And I actually think that this gave me more confidence to like buy more in the past few months. But you can see that in like mid-March, the price of Ethereum was like 1900, and then, you know, Maker like wicked to 1000. And then once ETH puked again, right, to the low of like roughly 1400, Maker actually held those lows, right? And of course, this is partly due to the buyback program, and then you can argue like from a fundamental case, it's just like very, very cheap, and that actually gave me like a lot more confidence to just like buy more, right? When I saw this level hold, it's kind of like this idea of an oversold market relative to a sold out market. Just because something is oversold doesn't mean that it's going to go up, right? There's probably a good reason for why something like Ethereum has been oversold for a long time, but I think, you know, something like Maker is like sold out, right? Like all the supply has been just bought back by the protocol, effectively burned from supply. And you know, once the market turns bullish, the only way is up, you know, because the buybacks are still going, there's still fundamental catalysts, and you know, sentiment is just so bad within like Ethereum, like script, I mean like DeFi in general, that I felt like, you know, it gave, or it kind of confirmed that, you know, risk is asymmetric, or sorry, there's like asymmetric risk reward where 1000 is the hardwood floor. It's gonna go over here, right? It held 1000 here, despite the market's nuking. So like, what's gonna take us lower, probably nothing, honestly, right? Absent from like a protocol hack, which is always a risk. But I choose to ignore that risk. But anyways, yeah. So I mean, TLDR, I'm a very, very long maker. Good to. I mean, we're pushing, we're continuing to pump. That's always great. But let's talk about some new updates, right? Because buybacks alone is like whatever, right? You guys already know this. So in the following weeks and months, in the next 3 or 4 weeks or so, there's gonna be 2 new updates to Maker. By the way, Sky and Maker, they're the same token, right? But Sky staking and the token migration from Maker to Sky, which will result in a token burn. So this is a proposal, or not a proposal, like a forum post back in April, like late April, and when Rune, the founder of the project, mentioned that they're gonna do a forced migration from Maker to Sky and also turn on Sky staking, right? And the TLDR for this post is right now Maker is a project that takes all of its profits and then buys back the token, which is good. But with this proposal or update, 50% of the profits will now go to Sky stakers. So instead of $500,000 per day going into buybacks, 250K will go to buybacks, and then 250K will go to Sky stakers. So if you assume that the annual profits for Maker is like roughly $80 million, and assume that 33% of the supply is going to be staked, then the estimated APY for staking this token is going to be roughly 7.7%, which is not too shabby, right? So around early June, Maker will be a token that has buybacks, and also you can stake it to earn a 7.7% APY roughly. Who knows? Like maybe this alone is going to get people to buy this token. Like from a fundamental perspective, it doesn't really change anything, right? It's just kind of like just redirecting where the profits go. But crypto is so inefficient, and people don't pay attention to these things. So I think if you read forum posts and like just do basic math, I think there is edge there. Who knows? Like maybe it doesn't matter. But it could be good, right? It's definitely not bearish, I think. So it's part 2 of this recent post by Rune is the token migration, or the forced token migration. So like I mentioned, a year or two, like a year and a half ago, Maker rebranded to Sky. So you can convert 1 Maker token to receive 24,000 Sky right now. But it hasn't really been a successful rebrand because what's the point, right? And that's kind of what they're trying to do, right? They're trying to incentivize more supply to be migrated to the new token by having staking and also having delayed upgrade penalties. So if you convert your token before September 18th, you get the whole 24,000 Sky, right, for every 1 Maker. But after that, there's going to be a 1% penalty. So instead of like 1 to 24,000, that being the conversion rate, it's going to be 1 to 23,760, right? Because it's like minus 1%. And then 3 months after, the penalty will go up by 1%. So it'll be 2%. Of course, this can take forever, right? But you should assume that the majority of the supply should convert before September 18th, because otherwise you're going to like just lose money, right? And what does this matter? I actually think it's important. I mean, there's like actual logistical things like, okay, like maybe this will help build liquidity for Sky, and then like centralized exchanges that can list it more. But I think the more interesting thing to at least think about is, this should lead, or this should tell us how many tokens are lost forever, like dead supply. And this is like one of the more interesting things about like older tokens. Older tokens tend to have like dead supply for numerous factors. People lose their private keys. People die, people forget that they have tokens, etc., etc. Whatever the reason is, Maker has been a token. It's one of the oldest ERC20s. They launched in 2017, and a lot of the supply has been dead. And you can, because like 8 years ago, right, 7 years ago, hardware wallets were like not as good as they are now. People didn't really think about managing private keys. And one example I like to point at for the argument for lost tokens is Aragon DAO. This project is completely dead, but they launched in 2017 and they raised a bunch of money for the ICO, and they haven't done anything. And I think around 2022, 2023, a group of people noticed that this DAO had $160 million in the treasury, like Ethereum, USDC, etc. And this token was trading under 100 million at the beginning of 2023. So a bunch of people decided to buy the token and then go to governance and demand that people can redeem each token for their treasury. So hypothetically, if you bought this token at 80 mil and then the treasury was at 160, you 2x your money, right? By redeeming the token. And the treasury raiders ended up winning, right? And this this redemption did happen. But in order for people to redeem their treasury, they had to migrate the token from like V1 to V2 for this thing to actually happen. And what ended up happening was 27% of the supply did not migrate, right? They didn't like take the chance to redeem these things for the treasury. Like, why would they do this, right? Like, who are these people? Are they stupid? They could be stupid, but chances are, right, it suggests that 27% of the supply has been lost or abandoned, right? Because most of them has not moved since 2020. Old tokens tend to have that supply. And I went ahead and done some on-chain analysis. So let me kind of explain this chart here. So actually, let's talk about this for. So one thing about AI is it actually is really interesting. I was able to like create this Dune query, right, to look at how many like dormant tokens there are for Maker. So I guess it's improving my abilities as an analyst potentially, right? But right now the supply of Maker is 875K. There's like roughly 8,000 tokens that have not been converted, right? So there's like an old Maker token, you had to convert it to Maker, like the current version. 8,000 were not converted, right? Let's assume that there's 100% loss rate, because if they haven't converted by now, they're never going to convert. Okay, there's like 20,000 tokens that's been dormant for 1 to 2 years. We can assume 33% is burnt or like lost. There's 38,000 tokens dormant for 3 to 4 years. Let's assume 75% is like lost, right? And that's kind of like the math here. And if you do this, right, and I mean, these are all assumptions here, I got to roughly 100,000, right, lost tokens, or roughly 10% of the initial total supply. Which, I mean, you can argue that this is like too aggressive and like whatnot, but also like Aragon DAO, like 27% was lost, right? So I actually think this is a conservative estimate. I actually think that maybe I can expect like 10 to 30% of the tokens, like Maker tokens, to be burnt. And like what does this mean for the price, right? If 10% of the supply is like burnt, aka lost, then even if the market cap stays the same, the price should go up, right? Because if you do like, if you think about like easy to do math, right? If you take a token and then you burn 50% of the supply and the market cap remains flat, then the token should go up 2x, right? Because like half of this thing is burnt. So, hypothetically, if this is like an Aragon DAO situation and then 25% of the supply is lost forever, then Maker should go up by 33%. Right, just do the math. The problem is that this thing is going to take so long for this to happen. But I think, around September 18th, people will start to look around and be like, wait, like how are there so many Maker tokens that's been not converted to Sky despite the penalty? And then I think, this is going to be like it's not really a catalyst or a tailwind, but then like there's going to be like, as more time passes, there's going to be more certainty around how many tokens are burnt. And that should be supportive of Maker price, right? Because I don't think the market is pricing in any of this into the token right now. And then, let's just assume that, the price of Maker stays flat, and then 10% supply is burnt, right? Then the price should go up by like roughly 12-15%, anyways, not that interesting. But that's, I think it's kind of interesting, right? Because I know Maker is kind of like a boring project, but one of the reasons they make so much fucking money is because there's so much DAI, or like the stablecoin, that's been lost forever, right? Because I think there's like over $1 billion worth of DAI that just hasn't moved in so long. And technically, like the project itself, they can just take all that like dollar backing and just like buy T-bills, right? And just clip the risk-free rate forever in perpetuity. It's actually like a money printing machine. And this is something that like newer projects don't have the luxury of, because in the year 2025, it's a lot easier to custody assets, right? People are more educated. So, the one benefit of like this old ass boomer token, boomer project, is that there's so many lost tokens that is supportive of like the fundamentals and like the token price, etc. And by the way, if you're enjoying this analysis, make sure to check out the Humble Farm Army. This is my premium Discord. I post 3 videos every single week, and I share my portfolio in real time. Lastly, the Spark Launch Catalyst. This thing is kind of frustrating, right? Because if you remember back to my channel, I bought MKR for the first time here, right? Because I was expecting a pump into like the Spark launch, and it hasn't launched yet. It's been like what, 2 years, and they haven't launched anything. So it's really hard to know when this thing will ever launch. But the team's been working hard, right? Working hard, whatever. They've been teasing this, and then if you look at the Discord, right, they've been teasing this for they've been teasing this a lot like recently. So I think it's happening relatively soon. I mean, this is a screenshot from a while ago, but Rune, the founder, said the forced migration will be a slow process to give people time to react. But if there is any lost supply, it's going to end up getting burned. But before that happens, there's going to be sky staking, both giving USDS and giving Spark. Sky staking, according to this, is going to happen like 2 to 3 weeks after May 15th, 19th, which is going to be like early June. So I'm optimistic that it can happen right around June. If not, I'll be fucking pissed. But we keep moving forward, right? Let's talk about if it happens, like what does it mean? So Spark, Spark is kind of like a spin-off from MakerDAO. So Spark has been like an internal project within Maker that's been like profitable, and now Spark is going to have their own token. And because Maker has spent so much money and time incubating this thing, there's like this agreed upon thing where 50% of the Spark token is going to be distributed to Sky and USDS stakers in the first 2 years. And Spark is not going to be the only spin-off from Maker. There's going to be a bunch of new tokens that's going to be like pooped out, right, by like the Maker or Sky DAO. And all those tokens can only be farmed by staking Sky or USDS. So it's kind of like this fair farming program, which should increase demand for the stablecoin, which means that the profit numbers are going to look ridiculous. The fundamentals are going to start to look ridiculous, like ridiculously good once these things launch. Spark has 2 products. So most people know Spark as an Aave fork, which is like why people aren't too excited. But because they are a spin-off, or aka a star from Sky, they get to borrow stablecoins at a cheap rate from Sky and then deploy it on chain. I think the borrow rate for Spark is like roughly 3.5% or so. It always changes, so I forget off the top of my head. But hypothetically, right, Spark can just like borrow stablecoins from Sky at a 3.5% rate. And if Athena or Aave is paying like 6% rate or like 4% or 5% on chain, then they can just like deploy it there and then clip the profits. So Spark helps expand the USDS supply to other chains, new projects, and Sky is trying to be like this conservative parent, like umbrella DAO, and then there's going to be like all these new projects, and their sole purpose is to grow USDS in exchange for like this cheap stablecoin rate. So it's kind of like a stablecoin hedge fund if you want to think about it that way. And in Q1, Spark made $40 million in revenue, and this is basically with 0 token incentives. They were going to give like 2% of supply to like people that use Spark in like the past 2 years. But I mean, I don't really think that people are aggressively farming this right now. So it's basically $40 million of like pure revenue. Of course, there is cost, right? I think the margins are fairly low. But they make roughly 160 mil in revenue per year. It's only going to keep going up. And like how much can this token be worth, right? 2.5x sales, right? 500 mil FTV. I don't think it's that ridiculous. Right, but so let's just. By the way, I have no idea where it's going to launch, right? But like, let's just say it's worth $500 million. Like I said, 50% of the supply is going to be handed out to USDS and Sky stakers in the first 2 years. I think most of it is going to go to USDS stakers. So let's just assume that like 200 million is going to go to USDS stakers. If people want a 10% APY on stablecoins, right, paid in the Spark token, then that just means that there's going to be $2 billion of incremental demand for USDS, right? Because $200 million to $2 billion is basically a 10% APY. And this is like very, very generalized math, right? It's more nuanced than that, but just as like a thought experiment, right? If all that capital enters T-bills, right? Because people give Sky $2 billion in dollars to like mint this thing, the DAO can just like buy T-bills, the risk-free rate, earning 4%, and then the profits just go up $80 million, right? Because it's all revenue, it's pure profit because there's a bunch of revenue at zero cost. All the costs was like how much money they have spent in the past 2 years, right? So all so once this thing launches, it's at zero cost. But like like this guy, like the maker holders had to like bear these costs, like holding this thing in the past few years. But anyways, if $2 billion gets added, right, that would send the stablecoin supply to new highs. So I mean, if you really think about it, right, if you go back to like this maker burn dashboard, if Spark launches, the estimate of annual profits is going to go up by 2x. The stablecoin supply is going to be at new highs. And then there's like the stablecoin bill, right? ETH maybe is bottoming, right? Think about the narrative, right? So I'm more so like just buying a bunch of maker, anticipating this catalyst. And if it happens, then hopefully it plays out, right? But like that's basically the trade that I've been outlining since February of this year, right? And you can like watch, and you can verify this, like watch my older videos 2-3 months ago. Last catalyst, I mean, it's not really like a strong catalyst, but the stablecoin bill, there's been more movement on this in DC, and industry veterans and like experts expect that this will be signed by Trump around July or August. So this stablecoin bill, it mostly targets centralized issuers. It doesn't really touch on Ethereum or DeFi. I mean, it kind of does, but like not really. I think there's a part in the stablecoin bill, the Genius Act, where they mentioned that DeFi is mostly going to be excluded, and there's going to be like a follow-up bill that focuses on DeFi, like maybe next year. But anyways, in crypto, price leads narrative, right? Price goes up, and then people come up with a reason on like why price went up, right? Because humans, we always want a way to rationalize why things happen, even if it makes no sense. That's why if you go to like CNBC or like financial media, it's like, oh, like stock market goes up 2% on like trade deal rumors or whatever, right? Chances are it probably had nothing to do with that, right? But people need a reason to like explain something. And this is apparently true. Like this is very, very true in crypto, right? Bitcoin goes up and it's like, oh yeah, like actually that makes sense because of XYZ reason. But I just think that something like the stablecoin bill will just add tailwinds to like the DeFi trade, like in my case, the maker trade, even if it has like no fundamental effects, just because it's like, oh, like the US is like passing this. I'm not sure that's interesting, but I mean, this thing's happening in July, August, right? So like maybe that's bullish is how I think about it. It's definitely not bearish, which is like all that matters. So actually let's talk about the risks. So one of the risks that I've been monitoring like a hawk is this on-chain position. So one of the maker whales, he still owns, I think 3 or 4% of the supply. This guy basically put a sell wall at 0.85 maker ETH essentially. And like this sell wall is 10,000 maker, which is like 1% of supply. So if you go to the maker ETH chart and zoom in, you can kind of see that, yeah, like there's like this wall at 0.85, right? That has not been broken. And it's literally this guy, right? And people are, and it kind of like led to this pullback, right? This is concerning, right? Because what if he sells more tokens? And I think this is like one of the biggest risks outside of like the team just like delaying the Spark launch. But I've been monitoring I've been monitoring on-chain activity, and there's so many whales that sold their maker to Ethereum at these prices because of the sell wall. And I would expect over 10,000 maker has already been sold to rotate to Ethereum because of the sell wall. Because if you're a maker holder, you can just sell maker to Ethereum like at these levels, and then like just buy it back once this sell wall is like broken, right? Or like about to be broken. I kind of wish I did that, but it is what it is. Of course, there's like a lot of uncertainty, right? Will the people that sold maker for Ethereum buy back maker? Maybe not, right? And then like the sell wall will continue being a headwind for the price. But I also think that like this token is like still relatively cheap on a fundamental basis, and I choose to look past it. But I mean, any savvy investor is already aware of this, right? And I think a lot of the supply has already been sold to front run this. So I don't even think it's that big of a risk because it's already a well-known thing especially for anyone holding this in moderate size. Another risk. So by the way, I attend every single like month, like weekly Sky community call, right? Because this is like my bags, and this is like Ruin the founder. And I'm like, yo, like, why are you spending so much fucking money, right? And like this is also like the risk. There's so many expenses. So if you go to the system surplus, and like this like spend so much money to like maintain this thing. And you know they actually had like Ruin actually had like a good response to this. So you know, like all this money, right, is like $5 million to the launch project is just like them spending money to create new projects, right, each with their own token, like, which is fine, right? I mean, it's hard to know like if this is like being spent well or so smartly, like whatever. And then 3 million to like the Sky, like what the fuck is that? And then he mentioned that you know, most of this is going towards like on-chain incentives. So if, for example, if you go to Aave and then you go to markets, there's like USDS incentives. Where is it? Here, right? So like part of that is like just paying this. I'm like, okay, like maybe it's not that egregious, but it is pretty egregious, right? How much money they spend. Like my view has been that I think Sky Maker is, you know, there's a lot that could be improved. But I also really respect Ruin because he's one of the few DeFi founders that's still like working on like the same project. Like he founded like Maker like in 2014 or 2020, yeah, 2014 or 2015, right? It's pretty crazy. And I've also noticed that, you know, this is one of the like a month ago, I came up with this proposal, right? I'm not really a proposal, but I'm like, hey, at the forums, I'm like, yo, bro, like we are spending way too much money on the DAI savings rate, right? So you know, right now, let's go back here. You can stake USDS, the new stablecoin, at a 4.5% rate, and then you know there's also like the DAI savings rate, which is like the old token, old stablecoin, and you know they were paying a 3.5% rate, and I'm like, bro, like if the goal is to fucking rebrand, like why are you paying a rate, right? It makes no sense. Like why not like instead of like tapering it to 0 over time, right? And then pair it with the Spark launch so that you know the stablecoin demand won't like fall off the roof. And it seems like they've been listening, right? So you know it was like 3.5% on 420. They lowered it to 3.25, and then once a week they're like lowering it by 25 bips. So I expect like tomorrow or like on Monday, this will go down. So okay, it's like okay, they are listening, right, to the community. So like maybe it's fine. I mean, it's just a risk, right? I mean, I mean, like cost management is always like a risk when it comes to like the more fundamentally driven projects. But yeah, I mean, I don't know, like. How long is this video? 20. Okay, so I'm gonna wrap it up because this video is getting too long. I'm bullish Maker, as you know. My stance has not changed. I own a long Maker. I also own some Fartcoin, and you know, there's also like this idea of like the curse of knowledge of like the more you know, the more bearish you get, right? I think everyone's been like kind of been disillusioned with the space in the past few years because Ethereum has been kind of like a piece of shit, despite like this pump. I mean, this pump is crazy, right? But I feel like the ETH BTC ratio is kind of like it's like a barometer of like people's belief in like blockchain technology, and for this to go down, I feel like people have just kind of gone like really bearish and like really pessimistic, and you know maybe the genie's at the bottle, but also right, I feel like we are at really oversold levels in Ethereum, and maybe we're bouncing because of that. Maker has demonstrated signs that it is a sold out market, as I mentioned earlier. And for all those reasons, I choose to be bullish Maker into the stablecoin bill, into the Spark launch, into the Sky staking program update thing. And you guys, you guys know my position, right? Long Maker. So anyways, thank you guys for watching. See you guys maybe in a month or two, right? Because there really isn't much to like update you guys when it comes to Maker. But you know, recently I've been making less videos and kind of been trying to focus on like on my own trading. And you know, I've done okay, right, fairly well. So hopefully this keeps up. But yeah, it's gonna be for me. Thank you guys for watching. See you guys another time. Bye bye.